Stop looking at the weekly chart. I know it says strong buy. I know that feels safe. But right now, the 4-hour chart is screaming a truth that the weekly hasn't priced in yet, and it's about to liquidate a massive pocket of complacent longs. We are trading at 0.7151, and the entire China proxy narrative is walking a tightrope above 0.7159. There is one danger zone and one hidden opportunity right now. I'll show you both. Most traders see the strong monthly trend and buy blindly. Today, I'm going to show you the trapdoor they're standing on. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow. My session bias for the Australian dollar right now is fade mode. We are fading the daily neutrality against the 4-hour momentum collapse. The structure is heavy, and until proven otherwise, selling rips into the 20-period moving average is the only high probability play on the board. Write this number down. If we break and close above 0.7180 on the 4-hour timeframe today, the entire sell structure resets. That is the single invalidation level that flips the bias instantly. But here is the micro insight that matters right now. The herd is positioned for a weekly continuation, buying every dip because the 200-week moving average at 0.6824 is sloping up steeply. They are anchoring on the long-term trend, forgetting that the 4H MACD just crossed bearish. The institutions are fading the herd stop losses below 0.7159. Don't be the liquidity. Let's walk the charts from the macro down to the micro and expose the hidden gravity points. On the weekly time frame, we are undeniably in a strong uptrend. The 50-week moving average has crossed above the 100-week average, and price is holding comfortably above the 200-week anchor. But, and this is critical, we are currently rejected from a high volatility node. Zoom into the daily chart, and the momentum immediately cracks. We are neutral. The daily RSI at 48.6 has failed to hold above 50. That's not a bull market momentum, that's an exhaustion zone. The daily MACD is printing a flat 0.001, which tells me the bullish thrust is completely out of breath. Price is compressing right below the daily MA20 at 0.7180. That level is acting like a brick wall. Every touch of 0.7180 in the last 48 hours has been slapped down. Now, drop down to the 4-hour chart, and this is where the trap is set. We have a strong sell signal. This is a momentum cascade. The 4-hour MA20 has rolled over definitively, and the price action is a series of lower highs banging against that declining average. We are currently seeing a textbook negative divergence on the 4-hour MACD. Buyers tried to push the price up, but the momentum oscillator made a lower high. That's hidden weakness. That's the engine stalling mid-flight. And on the 1-hour chart, the sell signal is confirmed. The MA5 at 0.7164 is acting as the high-frequency resistance. As long as we are below the MA10 at 0.7160 on the 1-hour closes, the pressure is straight down. Here's what most traders miss. The liquidity is sitting right below 0.7159. There's nothing below there until the 0.7118 region, which is the 50-day moving average support. The bears want to run those stops. My key resistance is 0.7185 and 0.7191. My key support is the danger zone at 0.7165 down to 0.7159. Lose that zone, and it's a freefall magnet into the daily 50 MA. We also can't look at the Aussie in a vacuum. You have to watch the cross-asset linkage. The Australian dollar right now is moving tick for tick with iron or futures. We saw a crack in the China credit impulse data 24 hours ago, and the Aussie is pricing that fear instantly. It's not gold, it's not the DXY, it's the hard commodity link that is driving the selling pressure. This is the China proxy in full effect, and it's flashing a warning. So why is the structure crumbling despite the strong monthly uptrend? Yesterday's shift in analyst sentiment changed everything because it pricked the reflation bubble. We saw a series of analyst articles flip from bullish to cautiously neutral regarding Chinese demand. The 24-hour news cycle is screaming that the commodity supercycle narrative is hitting a demand air pocket. The Aussie is the risk barometer, and it's detecting a storm. The policy divergence is also a subtle killer here. While the RBA holds firm, the narrative around the US dollar isn't about a collapse anymore. It's about a hawkish hold. That yield differential spread is compressing, and that robs the Aussie of its carry trade appeal. My1 to 2-week directional lean is bearish until we recapture 0.7191. I expect a grind down to test the structural support at 0.7118. The exact event that invalidates this bearish lean is a daily close above 0.7185. If the daily candle absorbs that selling pressure, the 4-hour bearish structure breaks, and we chase the breakout towards 0.7250. Do you think the Aussie breaks 0.7120 this week? Comment yes or no. I'm tracking the consensus right now. Most people skip this section. That's exactly where the money is made. Keep watching. I'm going to give you 3 battle plans for this exact environment. From the sniper conservatism to the aggressive liquidity grab, strategy 1 is the sniper. This is the conservative approach, betting on the rejection of the mean. We are looking for a pullback to the death zone. The exact trigger condition is a 1-hour close below 0.7160. Confirming we have lost the short-term moving average support. If we get that closure, you enter short. Your stop loss is non-negotiable at 0.7185. That is above the 4H brick wall resistance. The logic is simple. If buyers push back above that, the trap has failed. Target 1 is 0.7140 for a quick scalp, and target 2 is the 0.7118 level, the 50-day MA. The risk-reward on this setup is a clean 1:3. The entire setup is void if we see an hourly close above 0.7180 before the trigger. Strategy 1 the sniper, conservative, entry, 0.7159, 1H close below, stop loss, 0.7185 take profit 1, 0.7140 take profit. 2. 0.7118 risk, reward. 1:3.1 are invalidation. Void if 1H candle closes back above 0.7180. Strategy 2 is the active trader. This is the standard setup for those who want to ride the momentum but need a safer entry. We wait for a mean reversion bounce. We want price to drift back up to the 0.7175 zone, exhausting the short-term bulls. Your entry condition is a bearish rejection wick on the 15-minute timeframe at 0.7175. The stop placement goes at 0.7195, just above the macro resistance cluster. You're giving it breathing room above 0.7191. Target 1 is 0.7150, and once target 1 is hit, you drag your stop to break even. Target 2 is the sweep of the lows down to 0.7120. This is a classic trend continuation trade within the 4H downtrend. Type your Australian dollar to US dollar range for tomorrow in the comments now. Let's see who's aligned on the breakdown. Strategy 3 is the aggressor. This is high risk. We are trading the counter trend bounce, or rather, fading the extreme extension. If we spike down to 0.7138 in the next session on high volume without a daily close below it, we execute a fast mean reversion long. This is a sniper bullet, not a swing trade. The entry is a market long at 0.7138 with a very tight stop at 0.7125. You are betting that the psychological support holds for a 15-minute bounce. Target 1 is a rapid exit at 0.7160, and target 2 is 0.7170. Only for those who can lose small and manage risk aggressively. Do not hold this through a session close. Strategy 3 the aggressor, high risk, entry, 0.7138, market long on spike, stop loss, 0.7125 take profit 1, 0.7160 take profit 2, 0.7170 risk, air reward, 1:2.5 are invalidation, void if price breaks below 0.7125 within 5 minutes of entry never risk more than 1 to 2% per trade. No positions through high-impact Chinese data or US ISM prints. Stops are non-negotiable. This is how you survive to trade the next big move. To summarize, the single most critical level for the next session is 0.7159. Lose that support floor, and the China proxy unwind accelerates hard. Hold it, and we just chop sideways, but the short pressure remains. Tomorrow, we are laser-focused on the US services PMI data. If that comes in hot, the US dollar rips higher, and that is the catalyst that takes out 0.7159. If you want the full breakdown on Bitcoin and the S&P divergence driven by these exact macro currents, that video is live now. Tap the end screen to see where the liquidity tide is flowing. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.